Hey everyone, welcome back to TSMC Part 9. Really, I should say Stonks Maxxing Day 167. Just taking a look at Intel stock and layoffs.com. So they're down, I think, 6-7% after their earnings for Q1. It was released yesterday. And it seems like Intel employees are pretty annoyed by this, Christina. Yeah, rumors of 20% headcount. I guess it does seem like might not be 100% true, but people are mad. That's for sure. Okay. So aside from the fact, we are here for TSMC, trying to finish our model here. And I think where we left off last time was we were taking a look at the balance sheet. It's not balancing right now, and I think it's because we still need to pull over some equity. Debts. What's this? Payables. Okay, payables. And then short-term loans, and also PP&E. So those are some of the big accounts that we need to forecast still. And then also non-controlling interest. Okay, so I think let's open up TSMC 10K. My strategy here is just to figure out what is exactly in non-controlling interest. Yeah, because it does seem pretty variable, I'm not gonna lie. Decrease in non-controlling interest. Okay, so I want to double check, but I think non-controlling interest is just the amount of money or profit you receive from a minority stake in a company. Let's take a look. Assume company A owns 75% of company B, 25% non-controlling interest in company B. Company A will fully consolidate its financials as company B. In other words, company A will claim 100% of company B's revenue and expenses and assets and liabilities. However, company A will allocate 25% of B's net income to the 25% non-controlling interest in company B. This will also be a non-controlling interest in shareholders' equity on the balance sheet. Below you can see an example of how non-controlling interests work. Okay, so maybe this is minority interest on the other party. Consolidated net income or loss attributable to net income. Okay. So when one company owns greater than 50% of another, but not 100%, since the first company has greater voting power, effectively controls. Okay. Valuing company requires financial statements to value, forecast future trends around profit and cash flows, interests, prepare consolidated financials, and really disclose enough information properly. Because assumptions is that there is hardly any decline or growth. Previous financials are analyzed to ascertain existing trends. The model predicts the growth of a subsidiary at a rate based on past trends. The company is experiencing dynamic growth or severe decline. Okay. Honestly, this doesn't really help too much. I think the one thing I'm confused on is, okay, so you have this number right here, this negative. Oh, I see. So if it's negative, that means okay, if it's negative, that means the 25%, in this case, 25% of company B that company A does not own has made $759 million in earnings. And so because the consolidated statements of income reports 100% of the entire revenues, you want to subtract 25% income that you reported here, but was not actually owned, so to speak, by, in this case, Walmart shareholders. Okay, so I just realized that these numbers are the same. Okay, I see. So the actual net income is actually a bit less. Okay, so I want to grow, I guess, net interest income expense. Okay. Then we also have I might want to do percent of debt. non-controlling interests. Okay, so let's add a comment here. Non-controlling interest is basically non-controlling interest is the profits associated with minority stakes that to be structures that TSMC is involved in. Okay. Negative. Need to adjust. This is specifically the yeah, I think outside stakes is probably the best way to put it. Basically, if there's multiple ownerships within a company that TSMC is also an owner in, then this number, the non-controlling interest, is reported. So I think that's probably the best way to put it. Oops. Okay. No border. And for 2020, so we're starting to see the minority stakes have been becoming profitable as of 2023, but I'm not entirely sure exactly what these businesses are. It's not super clear. Maybe they report it in their actual annual report. Let's take a look. Five operational highlights. Okay, maybe they don't have it in here. Oh, here we go. Subsidiary information and other special notes. So maybe JSAM. So the Japan Advanced Semiconductor Manufacturing. It's probably one. Oh, the ESMC. I think this might be with Infineon, NXP, Roche, or Bosch. I think Bosch is the other one. Venture Tech Alliance. Okay. Yeah, I think I'd probably do this as a percent of revenue, honestly. All right, just do this. So basically just flatline it. Actually, should I do of maybe percent of net income? Okay. Okay, so this I honestly think is a pretty good skeleton for our income statement. I guess now it's just how do we make this look a bit prettier? Okay, we could just keep 32.5. It does seem like this has historically been higher. So what does that mean? The dollar has been appreciating in value relative to the Taiwan dollar. So you're getting more bang for your buck. You're getting more NTD for your USD. Okay, so all of these are hard-coded. I might as well try to add that in here. Color this. Okay, so maybe I'll do this. Okay. What is in other income? I've basically just flatlined this. Other. Okay, they don't. Not much. So couldn't find disclosure on what's in here. Okay. So I don't know why my whole thing is fucked up. It's kind of disappointing. The formatting for all of these. Okay. So if they can sustain a 45% operating margin, doing pretty good. Okay, share of profits and associates. I just realized that it's just kept flat over time. Okay, and income tax expense. So this is an effective tax rate. feel like I should maybe color this in to link it, to show that it's linked. Not sure. Okay, this for sure though, we can fix the formatting. Okay, so other comprehensive income loss. Yeah, I don't even need comprehensive income, honestly. I feel like it just adds confusion. Alright, let me just delete all these spaces, honestly. I feel like it's kind of... Oh shoot, there is this space here. Oh man, I remember having this problem at some point. Alright, it's good enough, honestly. Alright, number... Okay, so this is pretty good. I think this is an actually pretty good stopping point for the income statements. I think cost of goods sold is one thing. It's a bit tricky because it does depend on our revenue by platform here. So if we think about, yeah, this is something that maybe we could work on a bit later. I think I still want to flesh out I still want to flesh out this part. So our balance sheet here. Get everything to balance. Damn, everything is really screwed up on this. Okay, I just realized that's the percent, so we might have to go in and fix that later. Okay, so we've come to the meat of the balance sheet build. And this is the plant, property, and equipment. So I think the way I want to do this, we have 2 nanometers expected in 2025. And then I believe the technology symposium yesterday or Wednesday suggested there's going to be an A16, so 1.6, and then an A14, 1.4. I think A16 is targeted for 2028, and then but I wonder oh god, I gotta choke myself. Okay. I wonder how early in advance TSMC actually makes their fabs. So I know right now they have a few projects going on, right? We can go into our fab tab to take a look. So they have their Japanese advanced semiconductor manufacturing started in 2024. Also the European Dresden fab also started in 2024. I know that Fab 21, which is going to be the Arizona fab, that one has been in production for phase 1. Okay, let's take a look. So, capital, because I think they'll explain. Fab 20, 21, and 22. So target of $165 billion USD in order gross PPE, land and land improvements. I guess I have 2 options too when thinking about projecting this. I can do it as a percent of revenues. I can also do it independently of revenues. And I think it would be a good idea for both, honestly. I feel like as a percent of revenue, then I feel like that will align with how TSMC probably thinks from a capital allocation perspective. If revenues are falling, you can't really sustain the same level of capital expenditures over time. But I think historically, looking at the past, 2020, 2021, 2022, especially in 2022, you had a decline in revenues. But if you look at the earnings calls, CC Wei and the TSMC management team pretty much reiterated their commitment to spending what they need to meet their original CapEx target in order to actually have something of value, to have a fab that can actually produce 3nm chips at a favorable yield without really sacrificing short-term gain or short-term profitability. So that's kind of the underlying basis for why I was thinking about potentially doing this independent of. So my thinking is they probably don't need too much more land, right? But this does kind of make my life a bit more complicated because I'm gonna have to maybe predict everything line by line. But guess we can give it a try. Okay. So percent of revenues. Yeah, this is very, very low. Okay, so I think I'll do this. I think I'll project the net CapEx spend as one of two ways. Percent year over year. I'll do this. So I'll do percent year over year. Damn, okay, so a lot of the 2023 CapEx was spent on equipment. I see, okay, so this is the equipment under installation and construction in progress. Okay. So with that being said, maybe do like a bare base and a bull. Okay, I guess, yeah, the big accounts, the accounts that really matter. I don't need a forecast land, I don't think, separately. Office equipment, honestly, probably not either. It seems like this is pretty minimal relative to the actual CapEx spend. Okay. Equipment under installation and construction in progress. So land and land improvements, building. So I'd imagine this is probably for 2 nanometers, getting everything online for 2 nanometers. So 2020. Okay, so I think I kind of want to move this up too. So the equipment under installation and construction progress. I think I'm going to yeah, I guess this is pretty lumpy. And let's see. So let's just make some numbers on the spot. Let's just grab everything by straight 50%. What do we get? I think this will quickly balloon to an unsustainable level. Why is this going down, actually? Oh, I see. Here we go. Okay. So if we grow by 50%, the machinery yeah, that's a decent amount. 5 trillion, which is double. I believe double. I'm trying to think. Yeah, double the 2024 revenues, which I don't think is sustainable, honestly. There's no shot this could happen. I'm gonna go use the bathroom real quick. So what is 100? I guess 100 billion USD would be at 300. Yeah, 300 billion. Okay, 100 billion USD will be 3 trillion. $3 trillion new Taiwan dollars over the course of about 5 years. Let's take a look at the annual report, because I think they do have something. I might have saved the screenshot. Oh God, this is not good. Here we go. Capacity plan. Oh, that might not be it actually. Okay, so 15 billion? Yeah, 15 billion. Okay, so it's 900, 45, 450, around that maybe. 450 billion capex for 2025. Let's see what they're guiding. Close this up real quick so I can sign in. So I keep hearing China tariff. And 90 deals in 90 days. Oh man, okay, this is... Oh, what the... Okay, so I tried logging into Refinitiv, but I just got booted. It's not even letting me sign in. Okay, it's good news. I think Intel stock is... Oh, okay, it's back in the 20 range. It was taking a beating today. All right, nice. Nice. Sirius XM is another stock I'm sort of interested in. Okay. Yeah, unfortunately, for a stock that's down 30%, it would have to go up. Let me see. It'd have to go up 60%, but now it's kind of made me think VFC stock. Oof, okay. When is the earnings actually? Okay, let's go back, exit tiles. Can we just minimize the tiles maybe? Oh, no. Close tile. I don't know why it's not letting me exit out of these. Okay, so let's take a look at TSMC again. They typically do give guidance on oh, Apple's at 209. Wow. Okay. Was not expecting that. VF Corp. Oh, my VF Corp. I lost so much money on that. Damn. Okay. Yeah, that's very impressive. To 58% at the midpoint. 2 to 3% margin dilution impact. Okay, so 38 billion to 42 billion. I think this is the most amount of capex they've ever spent, honestly. Maybe back to their 2022 range. But they're spending over $1 trillion New Taiwan dollars. Okay, so I could see this being higher, like 200%. Yeah. I guess we can do gross margin based on guidance, honestly, because they're just expecting gross margin dilution for the foreseeable future, and it seems like, I'm trying to think. So 53% long-term gross margin. We can try to set that as our target. Okay, net capex spend. God. There we go. Nice. Okay, so let's see if we add this. 660. So I think that's maybe how much they spent without shifting over any equipment under installation and construction in progress. And it does seem like a bit of this. Okay, so bits, it's not super clear, but includes a small amount related to a recently announced additional 100 billion investment plan. Okay, so another thing I'm curious of is TSMC to 16A target release. Excuse me. And I actually do think there's a pretty good Substack from Semi Ecosystem. I was talking about it, so let me take a look. Okay, so it seems like this is the roadmap for the near future. I guess the next, oh shit. I'll leave a very helpful. I'll add this on here as well. So N2, N3, performance N3X 2026. Wow, they want to start A16 already. Okay. 2027 and then 2028 is A14. Wait, IDC Foundry forecast. Reach 10%? Okay. Mid 40% CAGR for the next 5 years period. Okay. We plan to build 11 for advanced packaging, preparing multiple phases of 2nm fabs in both Hsinchu and Kaohsiung Science Park. Second half of 2026. Okay. Okay. So I bet 2025 is going to be one of those years where construction in progress, or I guess the So what is it at right now? Okay, I think this is probably when they started doing the 2nm. So they started constructing it in 2022. I believe that's going to be Fab 20. The Fab 20 construction date, let's see. Okay, so 250. I bet this is going to be even more, so minus 200%. Yeah, this is tough because I feel like the year over year is pretty lumpy. So 2026, that's when you're going to start to see where is A16 going to be made? Okay, so machinery and equipment. Okay, I'm having so much trouble right now just trying to figure out, because it just feels like I'm doing voodoo magic. Maybe it's the coffee, it's kind of hindering me from actually making a move. So if I be pretty hand wavy with it, let's... Plus... Oh, I see, okay. Yeah, this is where I think the growth rates is a bit... Because we're working with negative numbers here. I don't think the growth rate really makes a lot of sense. Okay, maybe first thing we could do is just simplify things, make this as a percent of sales, percent of revenue. But let me add land and land improvements. Okay, buildings, machinery, equipment, installation under progress, land and land improvements. Okay. Okay, so what we could do is as a percent of revenue, is this underlined? Okay. %. 50%. Okay, I could see this. This could be reasonable. 2.8 trillion by 2030. Accumulated depreciation, let's see. So depreciation. Percent of gross PP&E. I guess should be net PP&E. Let's see if there's any trends. Because once you've depreciated everything, right, you can't. But I guess if you do net, the thing gets, oops. I guess if you do net, the number does get lower every time, right? So maybe depreciation will increase as a percent of net. Okay, just average. Okay, like about half. Oops. Equipment and wait. Okay, so we have plant, property, equipment here. Nice. Now we just need damn, that's a lot. Is it? No, it's not that bad. Okay, so current portion. Okay, I think we're actually almost there. Almost at the finish line. So if we just do 30%, 30% debt. I guess maybe percent non-cash assets. So let's just do this actually. Let's first do percent of PP&E net. Oops, and just keep it as a number. Just keep this at 6%, honestly. And just keep this at 94. Ooh. Oh, wait, okay. Debt, equity issuance, non-controlling interest. I don't think I did anything to that to change anything, so. So what did I do for the equity issuance? Got it, got it. Basically subtracted these numbers. Okay, so still something is off here. Minus accumulated depreciation. Oh, plus 202. I mean, even then, I feel like that should not change much. It's about 551. Total liabilities. So total assets is less than the liabilities, which is strange. Okay. Maybe this is it, the depreciation. Okay, we're getting there. Now the So 107, where's that coming from? Yeah, I don't even think I forecasted that. The other income. Oh, right of use, intangibles. Like, still probably not enough, but oh, it's negative. Okay. Non-controlling interest, so that's another thing. Others. Oh, this might be it. Okay, so others and non-controlling interest. Two statements or accounts on the equity tab I need to forecast. Curious though. Let's go. Okay. So non-controlling interest. $10,000. Man, I don't know how to forecast this, so I'm just gonna assume a trend of before. Yeah, I have no idea what others is too. So this one just straight up fluctuates. I would just keep it as is. All right, non-controlling interest. See if there's like a year-over-year increase. Or just keep it constant for now. Okay, nice. So now we have balance sheet that balances, a cash flow statement that gives us our shit. This is currently pricing us at $72 per share. Okay. So KE DCF, okay. And then cover. Oof, okay, I need to fix this drop down menu. All right. All right, so let's do this. I can just drag this over. Okay. Period. Yeah, I'm surprised. I guess working off oh wait. There we go. Should be higher. Ah, okay, so this is how we do it. All right. So current price, ADR price. A lot of shares outstanding actually. Okay, so I kind of want to make this a bit prettier. I guess I'll just add theme color. Wait, let's make this white. Okay. So 12 months, all right. And then let's see. Million, so that'll be 25 billion shares. All right, nice. Let's see if you can squish this even more. Okay, I think it's about the limit. Let's add. Supporting information. Stock info. Okay, so I think this is pretty good for now. I don't know why. Okay, I don't need this 2018 one actually. Okay, nice. Okay, so this is, I guess, our discounted cash flows. Maybe like the one thing I can do is like the matrix. So maybe I'll add some space in between. So we have our discounted cash flows and then our cover, so valuation price. Okay. All right. So we have kind of the model laid out now, which is good. I think now it's just a factor of can we get the numbers as accurate as possible? Okay, how long have I been streaming for, by the way? About an hour and 50, so not too long. Okay. I do think also another thing for this model is I want to have something in USD. So right now everything is in Taiwan dollars. So it's a bit confusing to forecast, I'm not going to lie. cost of goods sold. Okay, so I guess the one thing we can do is cost of revenue. Oh shoot, okay. It's fine. Oh, right. So if we do cost of goods sold, if we do percent revenue, so it's just the inverse of the margin. Okay. So if you do 44%, it's 56% margin. Okay, 46.1%. So at least 2% margin dilution for the near future. Seems like. Oh, wait, if we do 2%. Yeah, so. So this will bring margins down to 40. So 2025, 2 nanometers, 2026. I imagine this is probably. %. Okay, so that gets to a pretty comfortable gross margin range. I feel like this is probably gonna, crush the stock price a bit. Okay, so I think I'm gonna kind of stop here. We have cost of the goods sold, which is pretty interesting. Oops. I'm gonna take a break, come back in a bit. I definitely need to clean my room for a second. But yeah, I think decent amount of work done, got the skeleton down. I think now it's just a matter of how well we can get these numbers and definitely fix a bit of the formatting. So total shares is still pretty limited. And a lot of the stuff I did just flattened. So I think with that being said, I will catch you guys in the next one. Say peace for now. Bye.